Everyone tells you when to buy silver. The gurus say it's going to $500, the headlines say buy the dip. But today we're doing something different. We're going to tell you why you should stop. I've seen people lose more than just money in this shop. I've seen them lose their peace of mind. If you're buying silver for the wrong reasons, you're not building wealth, you're building a trap. Let's talk about the ghost of 120. Back in January, when the hype was at its peak, people were flooding in. They weren't investors, they were gamblers. They bought at $100, $110, $120 an ounce. Where are they now? They're either gone or they're angry. When the price settled at $74, they felt betrayed. But the market didn't betray them, their strategy did. If you bought at the top, you're not stuck unless you panic. But most people can't handle that pressure. And my cases. Almost no silver eagles, no mercury dimes. To a beginner, this looks like a supply shortage, another reason to panic buy. But look closer, it's a balance of supply and demand. Just because the shelf is empty doesn't mean the world is ending. It means people are working the plan. But the question is, are you working the right plan? The biggest mistake I see isn't about what you buy, it's about when you expect to sell. Just yesterday, a young man came in with his life savings, ready to buy the whole tray. I had to look him in the eye and tell him to walk out. Coming up next, why a silver dealer would actually refuse to take your money and the one-year rule that could save your financial future. So this young man walks in. He's got a stack of cash and he's ready to dump it all into silver. Most dealers would be happy. It's a huge sale, right? But then I asked him the most important question. When do you need this money back? His answer, 1 year. He and his wife were saving for a down payment on a house. He didn't trust the banks and he thought silver was a safe haven for his 12-month goal. I shook my head and told him, keep your money in the bank. He was shocked, but here's the reality. Silver is not a savings account, it's a volatile asset. Break down the math that people ignore. Yes, inflation might eat 5% of your money in a year. That hurts, but you know what hurts more? Silver dropping from $74 to $55 in a single month. If you have a fixed date like a house closing or a car payment and the market is down 20% on that day, you are forced to sell at a loss. You can't wait for the rebound because you need that house now. This is the difference between insurance and gambling. Silver is insurance for your wealth over decades. Over 12 months, it's a roller coaster. Silver is a teasing metal. It can stay flat, boring, and frustrating for 4 years and then move 50% in 4 weeks. If you aren't positioned to wait out the boring years, you will almost certainly fail. Think about the stress. Every morning you'd wake up checking the spot price, praying it doesn't drop before your house closing. That's not wealth matrix living, that's living in a cage of your own making. Once you realize that silver isn't for your short-term cash, you start to look at it differently. You stop worrying about the price and start looking at the piece. How do you stay interested when the price is flat and boring? That's where the joy of the hobby comes in. Next, we're going to show you a side of silver that has nothing to do with the spot price and how it saved one man's passion for stacking. Let me tell you why I still love this business after all these years. Yesterday, an elderly gentleman came in. He was in a wheelchair brought in by his daughter. He didn't ask me, what's the spot price? Or is silver going to the moon? What was he looking for? He had a handwritten list. He was trying to finish a collection of Roosevelt dimes he'd been working on for decades. We spent an hour, just an hour, going through trays. When we found that one specific coin he needed, the joy on his face was worth more than any profit margin. People just stack weight. They want ounces, but the pros, they understand numismatics, the study and collection of coins. Why does this matter for your wealth matrix? When the market is boring, when silver is just sitting at $74 and not moving, stackers get frustrated. They want to sell, but a collector is happy. They are looking for rarities, mint marks, and history. Changes your psychology. You stop checking a stressful app every 5 minutes and start enjoying the art in your hands. Turns a volatile investment into a lifelong passion. We're seeing this shift even with the younger generation. We have a young student who comes in here. He doesn't just buy bullion, he builds these custom bespoke watches. He uses high-quality parts, hand-assembles the movements, and creates something unique. It's about value add. Whether it's a rare coin or a custom watch, these items hold a different kind of value. They aren't just tied to the raw price of metal. They are tied to craftsmanship. If you're only chasing the spot price, you're at the mercy of the market. But if you diversify your stack with things you actually enjoy looking at, you create a psychological floor. You won't panic sell because you actually like what you own. How do you balance this with a real budget? And what about gold? The gold tray is empty for a reason. Coming up in the final part, we're talking about the exit strategy and how to build a plan that actually sticks for the next 10 years. We've talked about silver, but look at this tray. It's almost bone dry, just one gold coin left. Why is gold disappearing faster than silver right now? Gold is the quiet wealth. When the world feels uncertain, people don't just want volatility, they want stability. Gold is moving because people are transitioning from speculation to preservation. But for a stacker, this is a signal. If you can't find gold, you look at silver. But you have to do it with a budget. Even if you have unlimited funds without a limit, you're just buying chaos. Everyone asks me, when should I buy? Almost nobody asks, when should I sell? That is the biggest mistake. If you don't have an exit price or an exit date, you're just a hoarder, not an investor. What's a professional exit? Is it a price target or a life event? It should be a life event. Retirement, a child's education, or passing down a legacy. If you sell just because the price hit a number, you'll likely regret it when it goes higher. But if you sell because you reached a goal, you've won the game. So what is the wealth matrix strategy for silver in 2026? It's simple but hard to follow, the 5-year rule. If you need the cash sooner, keep it in the bank. Cost averaging, buy small, buy often. Don't try to time the moon, the joy factor. Buy at least one piece a month that you love for its beauty, not just its weight. Remember, time is your best friend. In the short term, the market is a voting machine. It's all about noise. In the long term, it's a weighing machine. It will weigh your patience. A dealer: I make money when you buy, but I'd rather lose a sale today and have a loyal customer for the next 20 years. Don't be the person who buys at the top and sells in a panic. Be the person who works the plan. Silver is more than just metal. It's a test of character. Are you ready to pass? Hit the subscribe button to stay updated with the wealth matrix and let us know in the comments. Are you a stacker or a collector? We'll see you in the next one.